Hello, you're welcome to my channel, Fininvest Niger. My name is Tom Princewill. I'm a certified securities and investment specialist, and I've been investing since the year 2006, thereabout, almost 20 years now. And I want to pass across my little knowledge to you in this video and other videos I have in the channel. So please stick around to the end of the video. Don't forget to subscribe to this channel, like this video, and also share it to members of your community. And not only that, if you're really serious about investing, you could contact me and let's see how I can render assistance, one way or the other, to contribute to your growth as a would-be investor. So we want to start with the company's revenue. The company made a revenue or sales of 87.404 billion naira, 87.404 billion naira, as against 87.764 billion naira in the year 2024. That was on the revenue there. You could discover that there is a slight drop here, a slight drop from 0.764 to 0.404. That's about 300 and something, 200 and something million thereabouts. You see, so that particular drop is not good news at all. We don't want to see drop. We don't want to see decline. We want to see companies, fundamentals, undertaking a kind of growth trajectory. All right, so you now look at the company's gross profit. The gross profit here is 63.936 billion naira, 63.936 billion naira, as against 58.250 billion. All right, there is an encouraging growth in the gross profit. All right, of about 5 billion naira, from 58 to 63.64. Let's say about 5 billion naira. That's somewhat encouraging. We now come to the operating profit. The operating profit here is 51.340 billion, 51.340 billion, as against 48.803 billion naira. So there's an increase here of approximately 49 billion to 51 billion, of about 1 or 2 billion thereabout. So that is commendable. We want to look at the company's profit before tax. The figure here is 11.316 billion naira, as against 11.250 billion naira. It's a marginal increase in profit after tax. It's okay. We want to equally highlight the profit after tax. This is the profit before tax. We want to look at the profit after tax. Now, the value here is 7.069 billion, as against 7.628 billion naira. It's a slight decrease, in between these values here. 7.069 billion as against 0.628 billion naira. So you come down to the company's total comprehensive income, which is 18.854 billion, as against 8.650 billion. There's an increase here, although this particular income doesn't really matter much. What really matters is the profit after tax, right? The final profit after tax is what really matters, and not this other one. So they had really increment in what doesn't matter, and there was, a slight decrease in what actually matters. Let's go down to the company's earnings per share, which is the most important figure in the entire analysis. The earnings per share dropped from 1 naira to 93 kobo. From 1 naira to 93 kobo, a drop of about 7 kobo. So this particular drop here is what is giving me a cause for concern, because generally I would prefer to see a kind of growth, increment in these figures, because when there's an increment, there's an assurance that the company share price will increase, because this is what really determines company share price. All right, these figures we are seeing, if there's an increase in this, you have that assurance that the share price is going to increase. But if there's a decrease or a kind of stagnation in this, then it would negatively affect the company's share price along the line, except maybe it's an improvement in the future. If not for that, then you have problem along the way. So we are through with the profit and loss segment of our analysis. We want to look at a bare bones skeletal summarized version of the balance sheet and the cash flow statement. Let's start with the cash flow here. The company has a cash flow of 79.43 billion naira, which is quite commendable. As the company can easily buy back shares, it can meet up with contingency expenditure, can carry out some projects without resorting to expensive borrowing from the bank, loan from the bank. And this is the company's equity. Equity simply means the difference between the company's assets and its liabilities. Total asset minus total liabilities will give you the company's equity. This same thing as company shareholder fund. Company equity is same thing. All right. And so we move to the equity per share. So in this case, we divide the equity here by the shares outstanding, and that will give you 9 naira 5 kobo. All right. So we'll skip this one for now. We come to the company's price. All right. The company's price here is 12 naira 70 kobo. 12 naira 70 kobo. And the shares outstanding is 7.60 billion. 7.60 billion. And by the time you multiply the price here, 12 naira 70 kobo, by the number of shares outstanding, 7.6 billion, you will arrive at 96.52 billion naira. That's the company's market capitalization. It gives you an idea of how big the company is. In other words, if you can afford this amount of money, if you can afford 97 billion naira, you can buy the whole company. All right, you could buy the whole company. You can afford maybe like, something less than that, you could buy the company based on, the amount you could afford. But this is an idea of how big the company is, and what it will take an investor to buy the whole company is a figure of this nature. All right, and so we now come to the company's price earning ratio. This figure is very important, and this figure is gotten by dividing the share price, which is then 12 naira 70 kobo, by the earnings per share, which is a 93 kobo. All right, divide 12 naira 70 kobo by 93 kobo. That will give you 13.96. 13.96. Okay, so it's telling us that the company is somewhat, I wouldn't really say it's expensive, because you need to make comparison with other companies in the same industry, in the same sector. But all the same, if you look at this parameter, this particular equities per share is a division of what the equity by the share outstanding you get. This particular one is there for comparison purpose. You compare this and this. All right, you compare this value and this value. The wider the result, the more expensive the company is, and the lower the result, the less expensive the company is. All right, so the issue is just that this is what really counts the most. All right, the PE ratio here, which is 13.96. All right, so it's telling you that for each 1 naira, gain in earning, for each 1 naira earnings for the company, for each 1 naira the company records as earning, it means that you are buying that earnings for 13 naira 96 kobo, or 14 naira, approximately. So imagine buying something that is selling for 1 naira for as much as 14 naira or 13 naira 96 kobo. That shows you how expensive the company is relatively. And not only that, it's telling you that all things being equal, that if there's no changes at all, if the company continues like this, it will take you about 13 years, about 13 or 14 years for you to recoup your investments in the company. That's the essence of this particular value, the PE ratio. It's very, very important you consider it in your analysis. Please, for having watched this video so far, I will still encourage that if you're very, very serious about investing, you can't do it alone. Please try and reach out to me. Let's see how we can help ourselves. Thank you very much for watching.